Here to break down the chart in Crude is Renaissance Macro's Jeff deGraaf. It's good to see you. Welcome back.
Thanks, Scott.
I mean, a remarkable trade when you consider what people were worried about, and then in a couple of days, how the reversal has taken place. It's pretty stunning.
Yeah, it certainly is. Look, you had an overbought condition. That overbought condition was driven by, obviously, fear and sentiment, but that was taking place in the whole context of a downtrend, and that downtrend has been in place for a long time. So, we were telling clients on Friday that if anything were to happen, some significant event, that we'd actually be selling crude into that. That ended up being pretty prescient. Obviously, it happened over the weekend, but there really wasn't anything in the charts or even in the energy stocks that said to us that there was some meaningful turn that had sustainability for crude. So we're looking at it as just another example of the downtrend dominating. I think what's interesting from our standpoint is just the other commodity complex, whether it's copper or gold or even natural gas, actually it still looks pretty good and looks like it's basing and might be in play here between now and the end of the year.
What's the chart look like on the S&P to you right now? We're 0.75% away from a new high. There was a stat I saw the other day where still a good portion was below the 200-day moving average. It's just tech has done so well of late that it's certainly helped.
It has. When we look at it, financials are leadership here. I know you were hitting on that before in the previous segment. Really, the strongest momentum names, believe it or not, in our work are utilities and financials, which certainly is not a big pro-cyclical, pro-beta, pro-growth type of environment. But look, they're working and they're helping to drive things higher. So I think the market actually looks fine. When we look at our breadth statistics, they're decent. They're not great, but they're decent. They're certainly good enough to poke through a new high. We're sitting at a 6,800 target on the S&P. That's probably a little aggressive, but we still certainly think that there's upside. And I would just say, for the record, and interestingly, this year, because of last year, the month of July since 1928 is now the strongest month of the year historically. So that has taken over from December. And we look at seasonality pretty carefully, particularly when there's not a lot of other things going on. And I would just say, look, the next month is probably set up pretty bullishly from the calendar's perspective.
I mean, it's worth also pointing out these are not your traditionally looked at necessarily defensive utilities, right? I mean, where
Correct.
you're once
100%.
chasing for defense and chasing for yield, now you're literally playing offense on the AI trade. And that's why you can make the delineation between the two views.
I agree with you 100%. And I think that's why charts are important, right? Because you don't necessarily get wed to some narrative of, oh, why would these work? Because it's so defensive. It's actually, possibly a brand new story. And I would also say it's happening globally, right? And that's been the case for financials as well, that this is a global story. It's not a U.S. phenomenon. It's a global story. And with the case with the financials, I think what's interesting and certainly important is it belies the concerns that are out there around the deterioration in the economy and credit, everything else. If we're really going to have a massive slowdown in aggregate demand, the financials will start to feel that, and they clearly are not suggesting that at this point.
But you're feeling pretty good ahead of their earnings, right? They kick off the whole thing in a couple weeks.
Yeah, I think earnings the second in July tend to be a better fade than not. That's not to say that you sell the stocks that are reporting, but it's kind of like, what have you done for me after the earnings are out? And that's why you go into these lulls in the late third quarter. So, from a precision standpoint, I'd be more inclined to raise some cash at the beginning of August into the middle part of August for, some better opportunities in, say, late September or October. But that's more nuanced and tactical than anything else. But no, I think they're going to be fine going into earnings for this quarter.
Should I continue to run with this tech trade? I mean, the sector's hitting a new high. It is that today, right? We have a new milestone there. The Q's not that far away, nor is the NASDAQ for that matter.
It's bifurcated. If you ask me, what do I think about Tesla? I'd say, yeah, of course, it's not a tech stock officially. If you ask me what I think about Google, I'd say yes. If you ask me what I think about Apple, I'd say no. So it's really bifurcated. Most of the semis, and we struggle with this with clients because we tell them this all the time, the relative performance of semiconductors is still negative. The trend is still down. There are a couple standouts for sure. Broadcom and NVIDIA look good. Credo looks great. But in aggregate, when we look at it on an equal weighted basis, it's still a relatively tired industry group. So I would focus on software. I'd focus on some of the communication names that kind of gets you in that quasi-tech. But I think it's relatively dangerous to make just a tech call. I think you have to go down into the industry groups and sub-industry groups. Electronic components is a great example of names.
Why?